Presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 13th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today, folks. And my outcome, as always, is to help you to become a better Money Master and to provide you with the tools that empower human potential, because you have an amazing potential within yourself, folks. And when it comes to your human potential and trading these markets, it's all about taking advantage of the tools that increase your probability of success. And my mission is to help you to achieve that success. So let's get started with one of our quotes from the book, The Art of War. And that quote goes like this: strategy, folks, strategy without tactics is the slowest route to victory. Tactics, though, without strategy is the noise before defeat. Make sure you've got your strategy, folks, when you are trading these markets out here. Tactics alone will not help you to win that battle. Our call-in number is 877-927-6648. Would love to hear from you. Right now, we've got the Dow trading off 7 points. The composite up 17. That's up about 0.5%. S&P up 4 points, out at 1523. Small caps up $1.77. You've got Google up 340. Apple here has popped a little bit to the upside, up $2.76 right now. So that's putting a little bit of juice into the markets. Let's start off by taking a look at the indexes, and we'll start off with the big dog. We'll start off with the Dow. As you, if you're watching us on Tiger TV, you're seeing the chart that we've got on the Dow. You can always catch the archive of this show on Channel 10, or if you're listening on TFNN.mobi and you're not driving and you like to see the charts on your mobile device or your smartphone, your smart pad, or what have you, just go to the homepage of TFNN.com. Over on the right-hand side, you'll see those little three smartphone type button. Just click on that, and this show will stream live to you. We're taking a look at really beautiful pattern set up here inside the Dow, failure or otherwise, and so far it has not failed. That's a 3 drive to a top pattern. It is a most recent 1.272 butterfly. We just simply have price that has been traveling sideways, consolidating sideways out here. It's been up, it's been down. It has not been all around, just simply consolidating sideways out here. Right now you've got the Dow trade out at 14,013, so it has not participated in the advance as the S&P 500 has done out there. So this pattern is still in place inside the Dow. Really a beautiful set of patterns out here on this stock chart. Get it closed back below the February 1st high today, and right now all that the Dow has had is an inside day. If it can close back below 14,1978, and I'll assume at this stage as I take a look at volume, you'd have a failure on both price and volume out there. If we go take a look at the S&P, so let's go take a look at the big dog in the house. That is the lead dog here. The S&P 500 up another 4 points here this morning. As we take a look at that, you can see this is really close to a failure here in this 1.272 butterfly. Yesterday's close about 15.1943, so pretty darn close to a failure out there. We'll see what kind of energy is behind the move in the S&P 500. If you take a look at a 1.272 butterfly, when it fails, price will typically travel to that next expansion area in the S&P 500. That'll take you up into that 1555 level out there. That is the 1.618 expansion. If we take a look at A to B equal CD patterns out here, if you come off that November 16th low as your A point all the way up to the December 18th, I think it's the 18th, 19th, let's see, 1447, 1448. It is the 1448. How about that? 1448. Even Steven was the high on December the 18th. Pulls back into December 31st. 1.272. That's really the next move here, the next expansion level. That would take it to 1531. The S&P trading at 1524 right now. I don't see any reason for it to not travel up to the 1531 level out there. Let's go take a look at the other indexes here. Let's go take a look at the NASDAQ Composite. Where is that on my chart here? NASDAQ Composite now, I think I might have to put this on a longer term. Maybe I don't. Give me a moment here. Over its swing point high out here from the 21st of September. That high is 31.96.93, now up and over it at 32.04.45. So what you'd be looking for today, bullish or bearish, you want to pay attention to this. Most certainly, if it closes back below 31.96.93 today, you would have a failure on price for sure. At the end of the day, we'd know if we had a failure on volume as well. If we take a look at A to B equals CD patterns on this, you would be coming out of the November 16th low all the way up to the high put in on December the 19th. Your retracement back down in the composite. The low was put in on December the 27th out there. What you can see completing today now, a 1-to-1 A to B equals CD. So you've got a completion of a 1-to-1 A to B equals CD. You have 100% move of a move, and now it's all going to be about where does price close. Where does price close, and what is the volume out here? So you got a couple of patterns. If you do get a close above the level of 31.96.93, regardless of volume, that would set up a next move on the A to B equals CD schedule. That would set up a move to 32.70.25 out there. The composite is the index here that is not in bought territory at all. Neither is the NDX 100. Those are the two wild cards out there with regard to freedom to flap their wings and run. A 1.272 butterfly pattern on the composite here, actually up at the 33.01 level. That's 100 points up from where it is traveling right now. But stay with one thing at a time. At least you know what the road ahead is by taking a look at advanced leading indicator patterns that would be out there just simply by using your A to B equals CD tool out there, as well as by going ahead and taking a look at expansions. However, what we do know that is going on today is that 1-to-1 A to B equals CD, and is that 100% move of a move taking on that swing point from September 21st out there. Let's go take a look at the NDX 100. Let's go see what the NDX 100 is doing out here as soon as I can find it on my screen. I may have too many little small charts here on my screen. Why isn't the NDX popping out at me? I know it's got to be here real close. Okay, well, I'm not going to worry about it. Let's go take a look at the Russell 2000. So we take a look at the Russell 2000, up 2 points here today, continuing its move higher past the 1-to-1 A to B equals CD point out here. The next level on the actual Russell 2000 would take it to 940.86. It's at 920. What's a 919.74 here? Right now, if we just take a look at expansions of swing points, that's something that you also just simply want to be familiar with. 933.36 would be the 1.6 expansion, so you can see in that 933 to 940 level is really where your next pattern would be setting up on the Russell 2000. We did have the bears show up for a little bear party for only a couple of trading sessions, but the bulls stompled them. I don't know that stompled is a word, but speaking of stomple, I think we saw that Snapple was trading down earlier. Dr. Pepper and the Snapple, I think, is the DPS, is the ticker symbol. So as long as I'm going to make up words here, we probably ought to go take a look at Dr. Pepper and the Snapple group. So let's go over and actually take a look at it before I forget to do that. Let me just switch over to my another tab out here. Again, DPS, Dr. Pepper and Snapple down 4.7%. I've never looked at that stock chart, so why not do it now? And those are pretty sugary drinks out there. So gapping down here this morning and gapping down with some volume. So let's go see what Snapple and Dr. Pepper are doing. Coming into the swing point, its most recent swing point out here, which would be November 16th, 2012. That has 2.4 million shares. The swing point is a low of 42.25 up to 43.05. It's has not gotten down and tested the low, but it's coming into that swing point with volume. Let's just draw a line across both the bottom and the top of that swing point. And if we give me a second here to draw that line here. Right now, it has rejected that swing point, but with volume, it'll be back down there. And the trading session is young. It's 1.5 million shares already in only 45 minutes of trading, coming into 1.1 million shares. So Dr. Pepper Snapple Group will be back down there. Let's see, do we have other institutional signs? You had some institutional signs of selling on January 23rd. You had a little bit as well back in October of 2012, October 24th to be specific. That would be another line that I would kind of draw as a benchmark across my screen. We'll go ahead and put that one in black here. That is a downdraft as well, which really set off the move lower into that November 16th area on Snapple. I'm just curious here. Give me a second. I want to put something up here. And no. And if we take a look, I'm going to just take this chart back here a little bit further. Let's put this on a weekly chart, and then we'll go ahead and leave Dr. Pepper and Snapple. That's a dangerous thing, isn't it, folks? When you take a look at this weekly chart, let me just refresh my screen out here. One of the things that you always want to be paying attention to is where are the high-volume bars? Where is it that you've got some real support? And as you take a look at this stock chart, you don't see that really anywhere. Well, you do see it. The highest volume bar takes you back right around towards that IPO time frame in October of 2008 out there. If this stock ever fell out of bed, this would make its way down into the $25 range out there. That is on Dr. Pepper and Snapple out there. Let's go back to the indexes here. I did mention I was doing the show with Tom yesterday from 4 to 6. I said that I would go ahead and show this chart out here. So let's go see what it is doing, because it's got two beautiful patterns that are either going to work or fail out here. And we're talking about, or what I'm speaking about, is the Philadelphia semiconductor industry, or index, I should say. So that is now breaking inside the gap. If you take a look at a couple patterns out here, this has got a beautiful 0.786 Gartley sell pattern that completed in essence over yesterday, the day before as well, up when it was in the $426 level. That was also coming into the downdraft here. A little gap down. That was the April 4th time frame. You also had at this price point area a 1.272 butterfly. That is the blue shaded pattern if you are watching us. The yellow shaded pattern being the Gartley sellout here. If you have two resistance lines, the first resistance line, which really did work as resistance, was the top of the gap down from April 4th. That was the 425.58. Your second line of resistance is going to be the closing of that gap. It's going to be the low of April 3rd out there, 429.94. Looks to me like that is what the SOX here wants to do, wants to at least go up and close that gap. So far, intraday, the top is 429.12, needs to get up to 429.94, not that much higher in order to go close that window out there. We'll see if that acts as a resistance point inside the Philadelphia semiconductor industry. Let's go to Kay Rico in Costa Rica, talking about Tom's shows last night, or the session that we had. Kay Rico called in, I think it was late last week or earlier this week. It's already Wednesday, could have been on Monday. And Kay Rico was looking into eyesight out there and helping the blind. So, Kay Rico, how you doing this morning?
Good morning, Steve. Everything's good. In case I lose you, it's just because of the internet connections in Costa Rica.
Well, I'll tell you what. Now would be a good chance, a good time to lose us, because we're going to go into break. I didn't realize we were so close to the break. Would you be good enough to stay on the line through the first break here?
Oh, cool. Absolutely.
Absolutely. When we get back, folks, we're going to go learn about some cool technology that Kay Rico has uncovered out there. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 2 points right now. Composite leading the charge up 18 points. S&P's up 5, not that far behind them. Russell 2000 now joining in on the gang. On the game here, up at 9:20. Let's go back out to Costa Rica to K. Rico. Thanks so much for holding, man.
Cool. So the most important thing, I mean, look, all of us have the gift of eyesight, and I take this very serious. That's why I jumped on, learning anything I could in regards to what, God forbid, if I or a family member or a friend were to lose an eye or our eyesight. What is the future chances of having a new eye implant? And this is what I discovered, and that's why I'm so excited. I don't get too excited too much anymore in life unless I capture a bad guy I'm after or whatever I have good happening in my family. But
now we're talking about bionic stuff. We're talking about that bionic man.
Yeah, and the guy yesterday, the $6 million guy, I still can't remember his name, Steve something, but...
Oh, somebody in the den will probably look it up for us. Okay. The $6 million man. That's right.
He was married to Farrah Fawcett at one time.
That's right. That's why. See, it's easy for you. You don't remember his name, but you sure remember her name.
Ay.
So tell us. You mentioned Steve Austin. Okay, that was the name, Steve Austin.
Yeah.
Yeah, so
okay.
that came from Al in the den there, Lee Major. So you mentioned you found a company in Israel, I believe, that was actually doing a full full implant where the eye was really a camera and connected to some of the neurons or something in the.
I'll give it to you. I'll give it to you. It's as generic and clean and simple as us non-technicians might.
Perfect. For us guys that are not doctors, perfect.
Yeah. Okay. The key is we all have the use of our retina that is on the front part of our eyeball.
Yes.
The retina is where the light comes into the eye and is converted into nerve impulses. Now, understand, when the retina is no more functioning, this is where this bionic eye implant takes over.
Okay.
Now, there's two companies, one in Israel and one in Australia. Israel is actually doing cutting into the eyeball in a 45 to 1 hour time frame operations where they cut into the eyeball and they insert this bionic small device that converts the light coming in through the damaged retina, and this acts as the new retina, and then it sends the nerve impulses to the optic nerve that enter the brain. I mean,
and what are the results? So what did what the actual folks who've taken is this people who did have sight and then they have lost it because of an accident, or is this working for people who were born with were born with blindness?
Good question. It's a two-part question, and it's the right-on question. The first answer is if you have an accident and you lose your eyesight, this could replace that eyesight. Now, it will be pixelated vision, where you'll have black and white pixels presented on your brain through your optic nerve, received in this compact little mini computer bionic eye.
Yeah.
So picture this. Your eye now will send a signal to your brain that you will perceive vision, even though it will be pixelated in the first years of this new technology. You will see black and white visions and make out gray areas of objects.
Yes.
But if you're blind and you can't see nothing, this is magnificent.
No, absolutely. So now, is it in the testing phase in Israel, or is it actually it's on the market and
The articles, both articles didn't say it was in the testing phase or it's on the market. They basically said it's coming out this year, and they all said the same thing towards the end of the articles that I read, and then I did some other research with some other guys that I know actually in the field of medicine, and they said whatever they come out with right now will be the beginning of something that will improve over the years, and in 25 years or less, we will have people who are totally blind able to see normal. Isn't that amazing?
Not only more amazing, I just want to thank you for going ahead and doing that research for us and sharing that with us, because I think that is the coolest things. I have a couple of friends that really spend a lot of time with folks that are blind. They're great golfers, and they teach them how to play golf and bowl and the whole thing. So it's a beautiful thing, my friend. Thanks so much for sharing that with us.
My pleasure. Love you, Steve. Take care.
All right, take care. 877-927-6648. Isn't that a great thing, folks? People who are blind are going to be able to see. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Gotta love it, folks. That's our man Al in the production room. He is always on the ball. The theme song from that $6 Million Man. And again, thanks to Kay Rico for doing that research for us and sharing that with everybody out here in the listening audience. As we come back to these markets out here, we're going to peek in on the euro. If you were listening in on the 9 o'clock show, we were showing the Gartley sell pattern that had completed at about 8:30 this morning. Gave you a nice bearish reversal signal as well at 8 o'clock, and the normal move of a Gartley buy or Gartley sell pattern is going to be the 0.618 retracement level of that entire move, in this case here off of the lows. Now, as this was making low, you take a look at this waterfall cascade if you're watching us on Tiger TV, and we are taking a look at the 30-minute chart here. And this goes back, I believe it was last Friday, February 7th. Was that Friday out there? No, that was Thursday. I think it was Thursday. Yeah, it was Thursday. It had to be Thursday because tomorrow's 14th. So it was Thursday out there. And as the market was moving down and cascading down, you did not want to catch that falling knife there. Obviously, the euro had moved into the oversold territory, just simply worked sideways to work that off. Now, a week from today, on at 6:30 to 7:30 p.m., so that's February 20th. I'm going to be doing a workshop. Now, I do workshops for my clients typically every other Wednesday. I do them in the afternoon from 3 to 4. This one I'm going to be doing from 6:30 to 7:30. It just simply allows more people to be able to attend live. It will be archived for you, but I'm going to share with you what I believe is one of the most exciting, successful trading patterns, plans that are out there, very detailed. I'm going to be sharing that with all subscribers to the newsletter service, Mastering Probability. If you haven't had a chance to test drive it, now, I'm telling you, now is the time, because what you want to do is you want to get your hands on this pattern because it works in all time frames and it works on all trading vehicles. In fact, as the euro was making its low right down in here, and when I say in here, down around the 230 time frame, February 8th out there, it was actually forming that pattern, that which I will be teaching to you, and I'm going to teach you how to master it. In an hour, I'm going to teach you how to master it. My newsletter service comes with a 30-day unconditional money-back guarantee. That means, folks, you've got access to me for 30 days. I put myself out there, which means you've got my cell phone number. When you send me an email, I send you an email back, and you've got ways to contact me, whether it's at the office. You know, folks email me, all my clients email me often when they've looking at stocks that they're taking a look at just to try to get a take or what have you. But this, folks, this is a program that you want to understand. The returns are amazing. It will you'll blow your mind. Now, you don't have to have a ton of technical skill out here. So if you're just beginning, this is the place that you want to absolutely be able to start. So just go to the homepage at tfn.com. Down towards the middle section, you'll see Trader's Edge. If you click on that, that'll take you to my newsletter subscription area. As well, you can go to newsletters. Under trading newsletters, you'll see Mastering Probability as well. Also, you can go download the free report that I've got out on the homepage at tfnn.com, reading the message of the market. So that would be a nice place for you to start. But that is going to be a week from today, next Wednesday, February 20th, from 6:30 to 7:30 p.m. The 0.618 retracement level on the euro is the 134.161. Can it trace below that? Yeah. What you want to do from a trading standpoint, remember we were talking about the art of war, about strategy without tactics is the slowest route to a victory, and that's okay. Tactics without strategy, though, is the noise before defeat. You want to make sure that you have a strategy. And your strategy is really about money management. It's about entry. It's about exit. It's about taking money off the table at times when you should. In this case here, your expectation should be that this would move down into the 134.161 level. Then you want to be paying attention to the candle formations out there. You want to be tightening your stop. That may be all you get out of the move out here, and that's a pretty nice move from the 135 level down to 134.2. So that'd be a nice move out there, just depending on what it is that you would be trading. But here's the point. It works on all vehicles, all time frames. This is just the 30-minute chart of the euro. You may have been trading a different pattern on the daily chart. You want to make sure that you stay inside your pattern that you're trading, your time frame, I should say, as well as the pattern that you're trading out there. And then what you want to do, if you want to peek down into lower-term time frames just to understand the EKG, the breathing pattern that's going on, fine, do it. But if nothing has changed on the pattern that you're trading, just always sit tight out there. So that is on the euro. I had a request in the den and then one by email. One in the den to take a look at Sarepta Therapeutics. That ticker symbol is SRPT. Now, one of the nice things here about we take a look at this thing really, took off to the I don't know what planet this went to, but it was a planet of take your profits here as this moved in one trading session. The day of October 2nd, closing out at $17.12. Well, closed at $14.99, actually. The very next day, coming out with some great results. I can't recall what it was they were curing, but some, just like in K. Rico's situation where he's doing the research on eyesight, and when we take a look at this, these folks were curing something as well. Came out with great news. Pops up to $45. Closes at $44.93. Huge volume, 27.9 million shares. Much more than the float that was out there. And this thing came back, not to the breakout area, at least not yet to the breakout area. Got inside the gap. In fact, it's still trading with inside the lower portion of the gap. But this is a great chart here to be able to identify where the bulls and bears are always showing their hands. And that's what you want to understand. That's why you really want to understand candlestick charting, because that is the message of the market. You want to go ahead and put other indicators with it, whether it's volume, whether it is A to B equals CD pattern, whether it's retracements, whatever it is that's used. Could be Bollinger Bands. It doesn't matter to me what technical indicators you use. You want to use the ones that you're comfortable with and that work for you. But what each of those indicators need is they need trigger points. They need a communication point. And that communication point is going to be those candle signals. Now, most candle signals are reversal signals out there. Some of them are continuation patterns, and some of them really, even though they are bullish or bearish, the reality is I kind of just drop them off. You just be aware that they're out there, but they don't act as resistance or support areas. And it's important to understand. I teach folks how to do that. There's a workshop available. But here's the point here. The question was, hey, what's going on with Sarepta Therapeutics? Well, let's take a look at the highs here. The highs here, there was a key reversal candle that came in. In fact, let me just go ahead and put up the overbought, oversold territory out here. There was a key reversal candle that came in on the session of November 27th. Not only was it a key reversal, it was a bearish engulfing candle. Now, that is important to understand here, because you can see as the market was moving up, somebody might have got all excited, depending on where they got into this stock here, and I'm sure this has got a huge supply line out here. Look, that high eventually will get hit again, $45. What's the time frame? I don't know. Where's the better spot to be able to enter a equity like this where you got a high volume high? Certainly you'd like to be able to do it when the market is moving down into a oversold condition, or down at least below that 50% level. The closer to 30, the better that you are. In this case here, as you take a look at the stock, it's been consolidating sideways ever since it made that one-day wonder out there on October the 3rd. It's had a bearish engulfing key reversal session on November 27th. You had a bearish engulfing here on December 4th. You really had one here as well on January the 8th. So, and then most recently here, you had a bear separating line. That was a trading session here from February the 11th out there. That is on the top side. Now, the red line going across there, which is really the low of that breakout session, that breakout day on October 3rd, acting as a pretty decent area of resistance. So what is that level? I would say that level is about $29.30 or so. How about the bottom of the level? That is really the consolidation area that we're taking a look at here going along the bottom. That's a black line that you see out here. If you take a look at where the bulls are hanging out, well, you've got bulls hanging out right here. Here's a bull sash candle on November the 1st, followed up here by a bullish engulfing candle on November the 5th. Subtle. The move was still down to the bottom. It was consolidating sideways. That's why that candle qualifies as a bullish engulfing on November the 5th. And you have a nice little gap up here as well. So you know that here in this area here, this is the defensible area of the bulls. You had a nice little bullish engulfing candle here on December the 31st. Forget this candle here. This January 1st candle doesn't exist because the market was closed, and I don't know why my system every now and then just simply duplicates things. You had a little hammer candle right down here. So at the bottom of this black line, if I blow this chart up here, this candle right here on January 22nd qualifies as a hammer candle. Qualifies why? Because it is a hammer candle. So we can clearly see where the bulls and bears are. Now, what's the trading range on this? The trading range is about $23.40 or so, up to the high of about $29.30. So if you're looking at this as an equity to get into, I would say just let it come back down and test the bottom of that of the horizontal consolidation area there. And if you're inside this trade and you get it closed below the October 31st level here, that is 21.21. You might want to exit the trade. Most likely what it will do is come all the way back to the breakout area of $17.12 out there. This candle formation here today is a candle formation referred to as three black crows out there. What does that mean? Well, you know what that means is eventually the high of that, which means really the top of the consolidation area, will again get tested. So that is on Sarepta Therapeutics. Putting that together with reading the message of the markets of the bulls and the bears out there. Also had a request, that came in by email. By one of my subscribers. We'll go take a look at it. The ticker symbol here is CAMP, C-A-M-P. So we're going to go camping with with C-A-M-P. Of course, let me see what the name is. CalAmp Corp out there. Let's see what CalAmp Corp does. They develop and market wireless communication solutions that deliver data, voice, and video for critical network communications and other applications, primarily in the United States. Now, that's a lot of words that said basically not a whole lot. But let's go see what the stock chart here is telling us. The ticker symbol, again, is CAMP, and the question is, hey, what is this doing? I'm in at around $8. So nice move there. The stock here is trading at $10. Had a nice session yesterday here. Nice day, both volume and wide price spread, and taking out a B point here, taking out a swing point, which takes you back to the October 5th level. That swing point had 440,000 shares. This yesterday doing about 800,000 shares, 797,000 shares to be exact. So let's pull this back out. You can see this thing is going to have some resistance overhead. So it looks like at some point in time that seatbelt has got to be, say, the seatbelt sign, fasten your seatbelts, is going to be put on this thing. Now on a daily chart, and then we'll go back to the left of it, this candle here today, not a reversal candle or anything like that. However, it's referred to as a bearish counterattack. So it is a sign out here that maybe what this will do is come back and test the area where it's just the most recent swing point that in essence it broke out from, and that goes back to October 5th. So if you're in this equity and you're at $8, one of the messages of the market and the candle, today's session is not over, so until it's over, you don't really have the message. But if the candle finished like this or a little bit lower, this would be called a bearish counterattack. And a bearish counterattack on a scale of what I'll call least bearish to most bearish reversal signals, this is the least bearish of them all. So it's not one to be worried about. Your expectation now would be, will this come back and will this test the high that it broke out from, the swing point here from October 5th? So your expectation should be that it would come back and test the 920 area. Volume, if it picks up volume to the downside, it could come back and test out the consolidation area. And where this ought to stop is and that's the reason why you want to take a look at volume bars on any stock chart. In this case here, we could go back and take a look at June 25th. Is it June? I'm sorry, June the 22nd out here. That is the last time that this thing had some big volume in it. The price spread wasn't so much that it was wide price spread, not like yesterday's session, but you did have nice volume. And so you want to make sure that that's one of the markers on your system. You can see here, as this equity was pulling back most recently, it was really that session. It was you could tell that is where the bulls in this trading session here are still in this equity. They supported price as price moved back down into that June 22nd level, which was 753 to 810 out there. Actually came down and created one of Stevie's hammer candles. It can be yours as well. That was the trading session of December 27th out there. So that was a nice move down into that hammer session here. You had a little bit of follow-through on the next couple of trading sessions, and that is right in the $8 price range. And that is where our man picked up this trade here. He picked it up in that $8 area. He utilized the power of these candlesticks that are out here. So bless your heart. And if we go back and now take a look at this on a longer-term standpoint and take a look at this on the weekly chart here, what we can see is it's moving into this downdraft here. However, the volume out there on the weekly basis, 2.4 million shares so far, 1 million shares here this week. Looks like what this wants to do, A to B equals CD patterns. This thing is kind of out of the universe here. But as long as it stays inside, so here on the monthly chart, what this is saying, which is kind of cool, probably lines up almost with that daily chart. If you take a look at the low of that candle, which is May 12th, 2006, I'm sorry, it's the weekly chart we're looking at. That low is $9.74. What you want to see is you'd like to see this stay within inside that range. It also happens to be the highs that we were looking at here back in October of 2012 out there, 972. So as long as it stays inside that candle, it should go up and make a move to test out its highs out there. That was on CAMP, C-A-M-P. Dow is off 20 points right now. Composite up 16. That is the strength in the marketplace. You got Protolabs up about 21%. Altisource up 10% to the downside. Rackspace and Cliffs Natural. We'll take a look at Cliffs Natural as soon as we come back. 877-927-6640. Be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at tfnn.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 29 points right now. Composite up 14. S&P down up a couple of points. Russell 2000 up about 3 as well. Let's take a quick peek in on Cliffs Natural, and then we'll go ahead and round this off and take a look at the indexes, what it is that you should be watching out for today. Cliffs Natural Resources down huge again, gapping down with substantial volume. So far, 20 million shares. That 20 million shares running into a swing point, a bullish engulfing candle, but a swing point with 10 million million shares nonetheless. Cliffs Natural Resources is going to try to find some support at that low of the December 4th bullish engulfing candle at 28.05. That is the price point on here. It is an absolute horrible-looking stock chart out here, not one that I would recommend going and trying to bottom fish here. However, if you are interested in bottom fishing and you are looking for some a great set of tools in order to be able to bottom fish out here, then go sign up for the workshop. I'm going to show you how to do it. This tool, the set of tools I'm going to show you, is absolutely what it is that you want to be able to bottom fish with in order to be able to identify nice places to enter. You also want to understand where it is that you're going to exit from. And I will tell you that in taking a look at Cliffs Natural Resources, that set of tools I'm going to teach next Wednesday, February 20th, from 6:30 to 7:30, would have had you getting into this equity here at the bottom on December the 4th. And, of course, then you're just simply using normal trading rules with regard to where your exits are on this. And those trading rules can be candlestick patterns. In this case here, what we knew is that Cliffs Natural Resources was running right into a downdraft from October 25th. That had 14 million shares. As it was working its way up there, did it with 9 million shares, 10 million shares on December the 31st out there, 5.8 million shares, 9 million shares on January 2nd. Told you it was just simply running out of energy out there. So all the details, folks, on the homepage of TFNN. Just go check out my newsletter service so you can enter that. As we take a look at the markets, let's go take a look at the Dow first here. We'll start off with the Dow. The Dow here, what you're going to be paying attention to is today's close. Today's close, if it is below yesterday's open, that price point for you is going to be the level of 13,971.24. You do that, or the market does that, what you'd end up with is a bearish engulfing candle inside the Dow. So you've got the 3 drive to a top pattern, the 1.272 pattern out here, and you'd have another reversal signal. So just another day between the bulls and the bears, but you can see what this basically is telling us with this move sideways. Take a look at this move here off of the C to D leg. Who's in control here? Clearly, the bull's in control. Now, as the Dow has moved sideways here, who is in control? Neither party really is in control here. You've got, but we can say momentum has shifted from the bulls being in control to more of a neutral to bearish stage out there, just simply based upon patterns. If we go take a look at the, let's see, the Russell 2000. Well, Russell 2000 would have to have quite a reversal day today if the Russell 2000 did, and in fact, Russell 2000 were to close somehow. If it was a bad close today, bad close would be a close below 913.77. You would have a key reversal day on the Russell 2000 along with a bearish engulfing. If we take a look at the S&P 500 out here, that has been the lead dog, so it would be important here to watch the S&P 500. A bad trading session on this would be a close below yesterday's open, 1517.01. These are areas that you want to be paying attention to because right now you've got the Dow leading things down, so it's the Dow competing against the composite, and a quick peek in on Apple, it's up $5 and change, so that is trying to hold things up there. I suppose it's that beautiful Dick Tracy watch that the folks over at Apple are working on. Hey, folks, stay tuned. Basil Chapman is up next. Thanks so much for spending your morning with me. Have a great trading session, a great day. I will look forward to seeing you tomorrow morning, 9 a.m. sharp. Really 9:06. Take care, folks. Bye-bye now.